The US elections are tomorrow, Tuesday, November 5th, and now everyone is wondering who will come out on top, Donald Trump or Kamala Harris. Certainly the outcome of the US elections will have a direct impact on financial markets, mainly affecting the benchmark index of the United States, the S&P 500. And I don't really need to tell you, though I'm doing it anyway, that the Bitcoin chart has a correlation with the American index. It's not a perfect correlation, but they tend to move in tandem. That's why, to understand what we might expect tomorrow during the US elections, we're going to be analyzing the traditional chart, the S&P 500, and the Nasdaq. By the way, it seems like nobody cares about the Nikkei anymore, even though it was significant just a few months ago. But as you can see, we don't really care either, since it had its moment of momentum, and we've already appreciated that in the past. The substantial volatility that we'll experience in financial markets tomorrow is sure to be intense. That's why we want to anticipate how the S&P 500 might behave. To start, here we have a trend line that was broken with a gap on September 17th. Notice how, when there's a lot of urgency or implicit aggression in the movement, they're so eager that the orders that don't happen during trading hours accumulate massively, resulting in a big gap at Monday's opening after the previous Friday, creating what's known as a breakaway gap. This gap breaks the structure. The price is unable to go back and test the trend line before continuing its upward momentum. Therefore, there's strength in the market, as there was never any real intention to close the gap. You know, there are many traditional investors who look to trade gap closures, but remember, it's all about probabilities, and it doesn't always work, at least for that type of gap trading approach. However, we're not here to discuss that right now. Instead, we want to understand what looks like a reaccumulation process that has broken upward, and following that bullish impulse, we're now tracking the price within this channel that we had already speculated on in previous videos, if not in a live session for Crypto Insight Premium. My memory might be a bit fuzzy here, but we had been mentioning that if the price were to break the structure, and by structure I mean this bullish channel you're seeing here, if there were a break, we'd ask ourselves how far could it go and why? This is when we focus on defending this zone we've placed around the $5,730 mark. It's true that the price has broken through this upward channel and has come to test the defense zone, which it's respecting for now. But remember, tomorrow, Tuesday, November 5th, we have some very interesting elections, and that will bring volatility. That's why we're focusing on understanding or evaluating how this volatility will be managed. And for that, it will be important to observe what price structure is being shaped by smart money. So far, we see that it's not the end of the world for the S&P 500, even though it broke the base of the upward channel. We see that it broke through, but that doesn't necessarily mean a trend reversal. Let's not assume all is lost or that we're headed downward, as the defense zone suggests they could be setting a trap. And that's exactly what we're going to evaluate. If you look at the Nasdaq chart, we've been observing a very similar structure. Here, we have the reaccumulation process. This whole process here, which, as you're seeing today, has been broken, and this upward impulse is being followed by a channel, a very common pattern in financial markets. Just as with the S&P 500, we wanted to assess how far the price could fall without it being the end of the world. For the Nasdaq, we previously identified a defense zone around $19,900, which, as you can see, the price hasn't reached yet. We could say it's halfway there. In other words, there's still some room to fall. When I say there's room to fall, I mean that even if it drops, it's not the end of the world for the Nasdaq. They could even be setting a trap and it wouldn't be a problem. The thing is, we don't know how long this will take, or what they'll do today or tomorrow morning. It's a shame we don't have this information, but today's video will leave you with a roadmap, one that will update live tomorrow for the Crypto Insight Premium community. With the information we have now, we can say we'll be assessing volatility in the markets. We'll see how it plays out, but ideally on Tuesday evening Spanish time, we'd like to see the S&P 500 making a climactic bearish move below the defense zone. This would be a very favorable scenario driven by volatility, injecting fear into the markets as a winner is declared. Now let me ask you, how do you think financial markets will react? Will they prefer a Trump win or a Harris win? We've conducted a survey within the Crypto Insight Premium community and are already seeing a shift in sentiment depending on who wins. I invite you to answer in the comments so others can get a sense of what people think might happen depending on the winner. And ultimately, let's say candidate X wins. Either way, we might see a climactic bearish action, which could be seen as a trap, allowing the price to resume its upward path. It makes sense to expect volatility to inject fear into the markets. However, if we lose as the defense zone and the trap isn't confirmed, this hypothesis would, of course, be discarded. Now, let me explain what we're seeing on MicroStrategy's chart, which acts as a bridge to the crypto ecosystem. And let me tell you, we're noticing some very interesting things. And of course, I'll also share what we're seeing on Bitcoin's chart. But first, welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity. Take a look at what MicroStrategy's chart is telling us. In the 4-hour time frame, we're seeing that recently there was a reaccumulation process that has taken us all the way to its all-time high. A remarkable achievement for MicroStrategy. It seems things are going very well for them. Now, check this. If we work with a bearish impulse here, flipping the situation, we see a complex corrective pattern starting with a W, followed by a weak E, and finally a full Z according to the textbook. This structure provides us with a lot of information. If we zoom in a bit, we'll see that the wedge, which we follow to confirm the Z, was already broken. It broke on Thursday at 6:30 p.m., and we're now seeing the classic bearish breakout impulse. Here, we need to identify which level they'll end up using. They might use this level you see on the screen or perhaps another one nearby. It's all yet to be determined. We'll know more once the market opens in a few hours, once we see the momentum this could bring and whether they stop it here or further down. But essentially, we need to pinpoint the end of this bearish breakout impulse, which might find support on one of the trend lines of the Z to understand where a correction could come in. Then, at a certain point, we'll see if they're challenging the bullish trend or aiming for new highs. For now, we're watching this behavior. What's uncertain for the future is whether this will continue or not. We don't speculate on that. We're focused on tomorrow. Take a look. Just like the S&P 500 and Nasdaq, there's a certain logic to MicroStrategy possibly experiencing a dip. And those dips wouldn't mean the end of the world, as they'd still be positioned for potential continuation. This is basically the message we want to convey. If we look at Bitcoin's chart on the 4-hour time frame, we'll also see an aggressive breakout here. A black swan event pushing the price upward. We had been observing a flat pattern that was broken, and the way it broke out was very encouraging, as it pointed to continued upward momentum. As we can see, the idea of a continuation didn't work out in the end, and now we're starting to understand why. We were working through a distribution phase, followed by a downward impulse and a bearish channel. Now we're in this pre-election context. Remember, it's tomorrow where it makes sense that there might be some kind of trap before a climactic move. We'll see how far that move goes, but if they want to, they could potentially bring it back to the origin of the breakout. As long as this level holds, let's switch back to the 4-hour chart. As long as this level holds, it's not the end of the world, and this could still continue. Notice how I'm pointing out that in both traditional and crypto markets, it makes sense to expect certain immediate drops. There's room to fall, a perfect setup to instill fear during this period of high volatility driven by the US elections. And after that, as long as certain structures in the S&P, Nasdaq, MicroStrategy, and now Bitcoin aren't breached, the medium and long-term bullish outlook remains intact. That's the main takeaway here. Let's quickly review some other altcoins, like Ethereum, for instance. Notice how it's sitting on a critical trend line that it's recognized. Why not throw in a scare and perform a cleanup or trap here? This wouldn't be the end of the world, and this could still continue. But as you can see, there's room for a bearish trap, which wouldn't mean it's the end of everything. Hence, why a bearish trap during the elections could make sense. Similarly, BNB could also pull an aggressive trap without it being disastrous. They could aim for liquidations at this level, and at first glance, that wouldn't confirm any tragedy. In Solana, we've broken a wedge that forms the corrective pattern for this impulse. It's a W in terms of concept, followed by a weak I, and this whole structure is a Z in wedge form. That wedge has now collapsed and is resting on the Z trend line. I wouldn't be surprised by a small trap, but this wouldn't mean all is lost. The message here isn't so much the price will behave exactly this way. Far from it. Nobody knows that. But rather, if you see the price drop, which makes sense for it to do, don't assume it's the end of the world, as it could be a trap orchestrated by smart money. Notice Cardano is in a key area. A bearish trap before a continuation wouldn't be the end of the world either. And this is what's driving both traditional and crypto markets. Who do you think will win the election? And how do you think markets will respond if one candidate or the other wins? If you enjoyed this advanced technical analysis, let me know in the comments. Give the video a like, subscribe to the channel, and click the bell so YouTube notifies you of future posts. Good luck with your trading, and until next time,